Hi, this is George. In this video, we are going to see about ratio spread in Banknifty. And I mentioned this as part 2 because in the description I have given what exactly is the strategy and other P&L reports of those in the description below that you can see and you can get hold of the strategy. Then you can see this strategy, this video, which will be a little more advanced than what would have been explained in the earlier video. So before getting to the video, please do subscribe to this channel and also please do like the video if you genuinely like it. Let's get into this video. So this is again a positional strategy on a weekly basis where we enter on a Thursday of previous week and exit on the expiry day at 9:30. And this for this the capital record is again 1.8 lakhs. And this is a different kind of strategy. But usually in our videos we describe strategy with strike prices where we say like buy like 800 points away, buy 300 points away, sell 500 points, something in that sort. But this is something where we say like we are going to buy one ATM call and put, that is okay, that is with its strike. But we are going to sell two OTM call and put, that is not based on strike, but that is based on premium. Say suppose if you are going to buy a call option ATM strike, say suppose if it is at 400 rupees, then what we are going to sell is we will just divide that 400 by 2, which is 200. We're going to sell something little lesser than 200, maybe around 180 to 200. That is how we select the strike with the help of premium. So for put option, usually put options premium will be little higher. Say suppose we are going to buy at 450, then divided by 2, 225, maybe around 200 to 225, we have to sell two lots of put option. So in this case, we are not completely hedged as we have one buy in both the sides and two sell on both sides. So totally we have two buy and four calls. So we are naked in both the sides with one lot. So that is one of the reason where capital is also little higher. So maybe if you want, we can protect it by buying little far out of the money we can buy. So this was what I have showed you last time, and it was like till December we had a very good profit. But now after February and March months, those 2 months we had a very big loss of 38%. Finally, we ended this strategy with only 1% profit for the whole year, which might not be even profit because of the brokerage. So yes, this strategy has little failed, I would say, but it has not given loss, but all the energy and happiness that would have given you for the first 10 months were vanished in the last 2 months. And yes, it is part and parcel of the trading environment. So now this graph I'm going to show you like as when you start the trading day on Thursday of previous week and ending on Thursday, how you would have your P&L would have looked without you doing any adjustment, with you just seeing and monitoring your P&L alone. So I'm just showing this so that people will get to know like are you really need not touch it, how it will be like, whether the market will go so much means how my profit and loss P&L will look. For those kind of questions, these graphs will come in handy. You can see for the month of January, totally at the maximum you saw only one day, that is 1 week, one day. It was like 6,000 loss, that too for very few minutes. Then it went to again 4,000 loss. Maximum loss you would have seen maybe 4,500 or so. Other than that, you are fine and you would have got around 18,000 profit. But the other 2 months, as I said, as it were like kind of bad months. So February, you can see like there was even 50,000 loss in 1 week at some point of time, and another week it was 35,000 at some point of time. I'll maybe give you the reason why and what happened in those weeks in the further upcoming slides. But yes, you need to know like if you had executed this strategy, you would have seen your P&L to be at 50,000 loss. Similarly, for the month of March, though we had 5 weeks, 4 weeks we were very fine, but only 1 week we had a loss of 45,000, which spoiled our entire portfolio, and we made a very big loss of 21%. Even February it was 17% loss, but this month it was 38% loss. So that is one thing. Now from this slide onwards, we'll be going to see two slides. Either sides, one is on how P&L would have impacted with the index, how P&L would have impacted with VIX. Most of the cases we see like our P&L is like kind of in correlation with how market moves, and also if market is not moving more than 1,000 points or so, then we'll be ending in a profit. Here it is like starting at 42,600, and there was not a very big boil movement, maybe 800 points movement, and maybe maximum of 1,000 point movement. Again, it came back, so we have a in profit only. This again, it is like 43,000 to 42,000. We were in almost profit only. Most of the cases you see like it was 42 400, maybe it went only maybe few points, 400 600 points maybe up. and then came down from 42 700 to 41 800, maybe 900 points or so, 600 700. Then again it went back to 600 points above, so we were in profit. So January, as I said, it was like totally not a problem month. February, this week is the one which I was talking about. Around 50,000, we saw some time loss. So, what exactly has happened in this week? Market started somewhere around little around 42,500. It came down to 39,500, which is 3,000 points down. Obviously, you will see a loss of 3,000 in your portfolio. So this is what has happened. Say so here it is like VIX was from 15 almost till maybe 18. So 18 weeks is a very big number. So obviously we will get into trouble. That is what exactly has happened in this week. That is the reason we saw a very big loss. 9th February is the best week actually. Market was little by little slowly going up in only one direction. It was not a very big movement in either of side. There was no very big crust and trough on either any side. And you see like a VIX also slowly went down. We saw like last week VIX has increased, so we got a very good premium. We captured a very good premium, and that premium has eroded here, and we have made a very good profit. 16th Feb again, it was like not a very big movement, and our profit and loss has been always on the consistent upward direction. 23rd February was a loss-making month of even 35,000 at some point of time, where we saw like from market of 42,000 it came to 39,600 or so, and then went to 40,000. So 2,000, more than 2,300 points dip. So yes, it was a loss, and VIX from 13 to 16. And March, 5 out of 5 4 weeks were profit. This is one of the week where we had no problem. This again was not a very big problem, though the graph is looking so much of up and down, but the scale is like not so high. Only 8,000 is the maximum loss, or 9,000 is the maximum loss you're seeing here. And this was the week that was having a very big loss again, where we saw around 45,000 loss. This again because of market from 41,500 to 39,000, which is again 2,500 loss, and VIX from 12 to almost 16. So these case scenarios, we won't be able to do anything. Whatever strategy you are taking, you will be lost because you have sold. You are in the seller side, and you are without hedge. You are naked in one position, so you will obviously end up in loss. If you want to avoid that, maybe you can take for a wait call, maybe 1,000 points or 1,500 points away. If you have bought something, say suppose here it was 41,000 when you are by entering. Maybe if you have bought 39,000 or for 39,500, sorry, for 1,000 points away or 1,500 means 40,000 only. So 40,000 put if you have bought, then you would have been saved from a very big loss. That is totally up to you. And this again was not a problem. This also, we were never in loss zone, maximum of 1,000 loss. So this is also fine. So the key learnings that we see is like when market is range bound, maybe maximum of 1,000 to 1,200 points in either direction also, won't be in a trouble and we'll be in a good profit. But if there is a very big swing of more than 5,500, 2,000 points, then yes, on any direction we'll be losing much, as because we are unprotected on both the sides. And 9th February was the best case scenario, where VIX went down and market was slowly going up. And 16th March was worst case scenario, which was exactly opposite. Market fell more than 2,500 and VIX increased from 12 to 16. These two cases were exactly same with the last strategy as well. That again was a bank nifty spread strategy. So mostly these things happen on any kind of scenario. If we have some counter strategies, then we could have avoided this situation. So maybe next week. And first point, let me again say that in many cases, I observe from the graph, like existing positions by Tuesday is a safer bet than Thursday. This is what I have told in the last video also. I'm able to interpret this by these graphs alone. And if you are a better reader in graphs and can tell a better story than this, please let us know in comments, so that it will be a very insightful thought for everybody. You can see like most of the cases, Tuesday and Thursday will not be a very big difference. Tuesday, 1,000 points profit here, 4,000, not a very big difference. Okay, you will be losing 3,000 rupees opportunity cost. That is okay. Here 6,000 and maybe 8,000 or 10,000, whatever. It's opportunity cost. But loss, when you are making loss, will not be a very big loss. See, here you are making around 45,000 loss, which would have reduced to maybe 30, less than 30,000 loss. So here we have saved almost 17,000 profit. Similarly, in many cases, I saw like, see, this is Tuesday. Tuesday is a holiday, so Wednesday or Monday, if you see, if you draw a line here, we are making same profit on Monday and Thursday. Tuesday, 7,000 profit here, 10,000 profit, 3,000 opportunity cost we are losing. And here again, loss of somewhere around 33,000. If you are closed on Tuesday, we were loss of only 15,000, so 20,000 we are saving the loss. Here again, here is a different scenario. We would have made profit of 6,000, but if you are closing on Tuesday, again 3,000 only. Maybe the graph is looking very big difference, but 3,000 the difference, not a big deal. 9th February is some better day. Either you close it on a Tuesday or Wednesday or Thursday, it doesn't make any difference. And February, this again, Tuesday, you were in loss of 3,000, same 3,000 here. January, again, it was not a very big deal. In fact, it is you, if you are closing on Tuesday, you were ended in profit of more than like 10,000. On a Wednesday, it was little low on a 4,000, 5,000. January, anyway, we saw it was not, we were never in a loss making zone here. Tuesday, you would have same, almost same Tuesday and Thursday here. And this again, we were not in a very big loss on a Tuesday or in a Thursday. So in fact, you are making loss on a Thursday, but it is after 9:30. So this is just my observation on this strategy. After making these graphs, I was able to see that exiting on a Tuesday is a better bet than Thursday. But anyway, in the part one, we told like to exit on a Thursday. So I have given the like a P&L for Thursday alone. Maybe going forward, we will change the strategies a little bit so that we can make a maximum profit. And also the VIX has reduced now tremendously. We need to see something on that, and we have to execute some strategies for that. And also, like next week, I might or might not be able to post a video as I'm working on some new strategy on expiry day. That will be exclusively for expiry day, as we have not seen any videos on that. That again mostly will be like without adjustment as usual, because I don't want to spend time or in the portal looking at the portfolio always. So I'm trying to figure out something. If it all comes good, maybe I'll take a week or two and I'll post that. And after that, maybe still we have 4 videos, 4 strategies that are yet to be disclosed. I have to disclose the uh, P&L of that. So that also will be coming in the near future. So the next video will be on the expiry, and then it will be followed by the other strategies. So until then, thank you. Bye. See you in the next video.